It's Friday, September 15, 2023. It's great to be home. I want to thank everybody for such a warm welcome in Texas. Thank you, Aaron, for having us out. Mr. Bill Holter, thank you. Chase Turner, SD Bullion, thanks to everybody. And again, everybody in Texas, you were great. It was great to meet everybody. But we're back home now. And without further ado, I want to get into this video. Special shout out to Patera, Appalachia's Homestead. She gave me a really nice shout out a few days back, recommended the Bill Holter video. So Patera, thank you so much for the shout out. Make sure that you check out Appalachia's Homestead, great channel. She's walking the walk. So I want to give her a shout out and a thank you. But we have a lot to talk about today. And I want to get caught up here. Just over the last couple days, some things that I want to touch on and some of the news today. CPI, 3.7% up. PPI, up 0.7%. 10-year bond yields today, 4.33%. Labor market still tight. Oil, what are we at? $91 and change today. And market's down today, but overall the market's been doing pretty well. It's been pretty resilient. So my question to everybody out there, next week, will Jerome Powell and the Fed raise rates? I don't really know. Does he have the guts to do it? I think at this point, there's a very, very good chance he could raise rates at the next meeting next week. Because look at the CPI, look at PPI. We have a very tight labor market. The last 4 weeks, jobless claims have been the lowest in the past 7 months for this 4-week period. So I don't know if he has a choice. I think he may have to raise. I don't know yet. I'm not going to make that call, but let me know what you think. Will Jerome Powell raise rates yet again next week? There's a very good probability right now that he will do it. So we have another strike. Plants now have shut down as UAW members went on strike. The facilities are right here. GM's mid-size truck and full-size van plant in Wentzville, Missouri, shutting down. Ford Ranger's mid-size pickup and Bronco SUV plant in Wayne, Michigan, shutting down. Stellantis Jeep plant in Toledo, Ohio, shutting down. This is about 12.7 thousand workers who will be on strike. And they are going to close more plants if they don't get an agreement. If an agreement is not reached, expect more plants to shut down. So this to me is another mess. And you would think, watching today, Dow Jones was down close to 300, I think about 288 points. You think things would be even worse on these markets. This is just another example of just how manipulated and how propped up they are. But when you look at what's happening, CPI, 3.7%. We have 3 automakers shutting plants down. And yet we don't even really see this reflected in the markets. The markets are purely hoping that the Fed is not going to raise rates next week. They don't believe that the Fed is going to raise rates next week. I don't know. I think there's a chance that the Fed is going to have to raise rates next week. But the markets completely ignore strikes. They're ignoring rate hikes. They're ignoring everything. The hedge today. Getting cold feet. Rising home contract cancellations hits 10-month high as affordability crisis worsens. I checked bankrate.com today, 30-year fixed rate, 7.51%. And I've got a handful of articles here I'm going to share with you. None of these in order, but feel free to comment down below. We are heading closer and closer to a major crisis here in housing. A new Redfin report Friday revealed the latest rumblings of a worsening housing affordability crisis. August saw the biggest level of canceled residential contracts in a year. In August, get this, 60,000 home purchase contracts fell through. That's 15.7% of homes under contract canceled. So people's the rates went up. People just could not get approved for loans, so they had to cancel their contracts. So this is going to be a continued problem here as we are going to watch mortgage rates increase as the Fed has no choice but to raise interest rates. 10-year bond yields, 4.33% today. When we look at mortgage rates, that is a reflection of the 10-year bond yield. And when you see 10-year bond yields continuing to creep up, you're going to see problems with mortgage rates. The cost to borrow money, the cost to service debt, credit card debt, auto loan debt, it's going up, ladies and gentlemen. If you need to take out a personal loan, you need to buy a house, the price to service this debt, to borrow money, is going to continue to go up. And it looks like minimal. We're getting one more rate hike. I think November is guaranteed. But there is now, to me, a much higher chance that we get a rate hike this September and possibly one in November. So is it going to be one? Is it going to be two? If we don't get one this month, we're guaranteed November. We get one this month, there's a possibility that we're going to get another one in November. So rate hikes are coming, ladies and gentlemen. Housing market fear sparked by Airbnb decline. This was Newsweek today. Few things that the Airbnb market has to worry about, and that's going to be restrictions. They just passed a massive restriction in New York that really is going to be catastrophic for Airbnb properties. Fewer people have money now to rent the Airbnb. So now we're going to see more restrictions in some areas, and more people have less money, less discretionary spending to go out and do these short-term rentals. And this is going to put more pressure on the Airbnb market. We were just out in Texas. When you look at the Austin area, the San Antonio area, there are more Airbnbs on the market than there are homes for sale. And you have less money now in the system. And certain areas around the country are going to see more restrictions where they just don't want these short-term rentals. And so this is going to be a big problem. So you have two headwinds. The consumer who has less money, and areas, cities, that are going to put more restrictions on these properties, making it much more difficult for the Airbnb market. Here's another one today, and this really reinforces this last article right here in Newsweek. And this hits my area right here, the local news. Summer slowdown strikes Palm Springs. Tourism takes a hit as occupancy tax drops. So the occupancy tax, we saw a major decline here. Palm Springs is reporting a steeper decline in tourism this year compared to last summer. The city's transient or tourism tax, it's an occupancy tax known as a room tax, which is primarily paid by visitors, tourism. It saw a 16% drop. So hotels and Airbnbs saw less people. And so a 16% drop in occupancy tax, that is a major hit. And, you know, if you watch some of my past videos, I said multiple times this summer, there were less people out here. Yes, it's very hot out here, but I noticed a very obvious drop in tourism. Definitely less traffic, less people out here, less people at the restaurants. So if the occupancy saw a huge drop, that means restaurants and retail saw a big drop also. So it's beginning to happen, ladies and gentlemen. And, you know, a lot of these people who went out and bought multiple properties, they wanted to be real estate moguls, and they have now acquired a lot of debt, and they didn't think about what happens if the economy slows down. What happens when that $7 trillion injection into the economy, when that begins to evaporate and dry up? What's going to happen? What happens when people lose jobs? What happens when people just begin to spend less money because they have less money? What happens when people lose, you know, just again lose jobs, or a spouse loses a job, and that discretionary money just evaporates and disappears? What's going to happen? These people did not think ahead. They just said, well, I have 1 or 2 properties that are doing well, so I'm going to go out and buy another 2 or 3 properties. There are people out there that bought multiple homes. They have a mortgage on their own home, and now they have 5 more mortgages on their Airbnb properties, and they wanted to be real estate moguls, but instead of paying cash, instead of putting a huge down payment down, having a small monthly payment, they went out and put the bare minimum down. In fact, what they did was they borrowed money out of their own home, and they went out and bought these properties, and now they're going to get themselves in a whirlwind of hurt. Think about that. They were borrowing money out of their own home to go buy this stuff. People borrowed money out of their own home to go buy cryptocurrencies. People are going to feel extreme pain here very, very soon. They're beginning to feel it right now. Excuse me. They're having restless nights. They're having a hard time sleeping now because people aren't renting their short-term rentals. And prices of homes are not going up like they did. They're beginning to come down. And we're looking at a real estate crisis, a collapse now. People are not buying homes like they did. And as we begin to see this Airbnb crisis begin to accelerate, we're going to see people run to the exits, begin to sell these homes. And guess what? Many of these people aren't going to get out because they're upside down. They've borrowed money out of some of these homes. They borrow money out of their own homes, and they're not going to be able to sell these homes. We're going to begin to see short sales again. We're going to begin to see major defaults in the real estate market again. And it's going to be, I believe, quite epic. Wolfstreet.com, mortgage rate buydowns by home builders are now all the rage to prop up sales. Lowering effective house prices in a big way, but don't get picked up by house price data. Buying down mortgage rates and piling on incentives does not show up in the prices of the homes they sell for these home builders. So the pricing data that we have from the Census Bureau about sales of new single-family homes does not include the cost of mortgage rate buydowns and incentives. Median price in July dropped roughly 12% from the peak in late 2022. But that does not figure the cost of buydowns or incentives. So again, much of this data very manipulated. It's not including the cost of the buydowns or the incentives, the swimming pools, the granite countertops, the travertine floors. This is not included. So we don't really know the accurate number of where and what these new home prices really are, what these sales prices really are. So again, be careful of the data that you're reading or the people you're listening to, because the 12% isn't really 12%. It's much higher than that. Now, shifting gears here, gas prices will inch higher next week before offering drivers relief, experts say. I saw Super Unleaded Arco last night at $6.29. This to me is going to guarantee that more inflation is on the way. What are you all paying for gas? Are you seeing the same thing I'm seeing? Here's some more bad news today, ladies and gentlemen, and most of you are well aware of this. You've been reading about this, watching reports of this. The Vegas cyber attack, the Vegas cyber siege, MGM properties paralyzed, Caesars Palace properties paralyzed. It's scary. It's very, very scary. And think about how quickly your bank can be paralyzed. If you don't hold it, you don't own it. You need to be preparing, because we are in a new world here, ladies and gentlemen, where it's going to be economic warfare, it's going to be cyber attack warfare, technology warfare. And the real scary thing here is not just what's happening in Vegas. And listen, you don't need to be in Vegas, ladies and gentlemen. You need to be here home right now preparing. You need to be working those side hustles. You need to be putting cash reserves away. You don't need to be worrying about a Vegas vacation or gambling in Vegas. You don't need to be doing that. You need to be doing what the smart money is doing. That's not hanging out in Vegas. That is home, preparing, getting your preps organized, more food, more water, more security, more training, getting in better health, putting those reserves away. That's what you need to be doing. You don't need to be partying and gambling and all that nonsense in Vegas. You need to be home right now getting ready. But you need to think about this. If they can paralyze Las Vegas. What stops them from paralyzing your bank? What stops them from paralyzing Wall Street? And most of all, what stops these groups from paralyzing the water treatment plants, the power plants, which are very, very vulnerable? If you have no power and you have no water, you're in big trouble. This is why you don't need to be in Vegas. You need to be right now putting water away, food away, training, knowing how to protect your food, your water, your assets. That's what we all need to be doing right now. But this is just another warning, another red flag, because if they can paralyze these casinos, which spend a lot of money on protecting themselves from this, what stops them from paralyzing your water treatment facilities, the water facilities, and the power plants? So we could be crippled in the blink of an eye. And most people don't think about it, don't realize it, but they're too busy watching football games, watching Aaron Rodgers, 23 million people watching that, when probably most people you talk to today, your friends, your family, anybody on the street, has no idea about the vulnerabilities of our power, of our water, and most people are doing absolutely nothing. But they're probably wearing an Aaron Rodgers jersey today. You have adult men running around with face paint on, adult men who know every player on every team, but yet they don't know what's happening with these cyber attacks. They don't know what's going to happen. They have no preparations, but they're wearing face paint at a football game. Spiking gas prices boosted retail sales last month. So we got all this good news that, oh, wow, retail sales are up. Isn't that wonderful news? How resilient the economy is. Remember, you are paying more and getting less, and you are paying more at the pump, and you're going to continue to pay more at the pump. Oil over $91 a barrel today. What's going to stop it from breaking 100 and then going absolutely bonkers after that? So again, you're going to pay more at the pump. And when you pay more at the pump, you're paying more at the store, because everything is shipped with oil. You need oil to fuel up those diesel trains, those diesel trucks, put fuel in those airplanes, those diesel engines on those ships that import everything from other countries, that stock our shelves. You're going to pay more and you're going to get less. And so I don't believe that that's a sign that the economy is resilient and doing well. To me, it's just a sign that people are having to spend less and get more. And while people are spending more and getting less, the hedge today, childcare now costs $1,031 more than public college tuition on average here in the United States of America. On average, 20% of household income is just going to pay child care. How in the world? I was talking to somebody at the gym this morning, and we're just talking about the price of gasoline and people driving around. And I'm in shock that I see as many people driving around. How in the world are people having to take 20% of their income and put it just towards childcare? And I look at gas prices, and I look at insurance prices, and I look at rent, and I look at mortgage, and I look at just the price of a car and what the average new car payment is, $753 a month, while insurance is up, auto insurance is up 19% compared to last year. How in the world are people doing this? I think people are taking on a lot of debt and putting themselves in grave danger in order to put gas in the car, to put food on the table, in order to have their children in childcare. People are going into massive debt doing this. McDonald's franchisee group says new California fast food bill will cause devastating financial blow. This was on CNBC last night. Bill AB 1228 was passed by the state Senate late Thursday and heads to Governor Newsom's desk for signature, which he is going to sign. Now, I'm not a big fan of McDonald's. I do like their coffee, but I do not eat there. Maybe I will do some hotcakes from time to time, but this is going to be devastating. Any fast food chain in California with at least 60 locations nationwide, they're going to have to pay their workers at least $20 per hour in the state of California. $20 per hour right here in the state of California to work at McDonald's. It's going to cost you $20 now to go to lunch at McDonald's. And it's amazing that the state has this much power that they can do this. And what stops them from going, okay, well, you don't have to have 60 locations, 30 locations, 10 locations. Remember, Los Angeles now has a mansion tax. You sell a house over $10 million, I believe it's 4.5%. You sell a house over $20 million, you pay a tax of 5%. So when does McDonald's just say, you know what, goodbye, see you later? If they do that, I mean, it's just unbelievable the power that the state of California has and the economic headwind now it's going to put on these restaurants. Shocking. Trucking company Yellow Trucking paid managers millions just before bankruptcy. Albert sent this to me yesterday. The July payments include the restructuring officer Matthew Doheny. He got $1 million. COO Darren Harris got $1.08 million. CEO Darren Hawkins got $625,000. So the people at the very top got paid very, very well, while all of the truck drivers and the people below got absolutely nothing. In fact, I don't really know. A lot of people are saying that and if correct me if I'm wrong, if you know these pensions, are they going to get paid by their pensions? I hear that they're going to get 40% of their pensions. These drivers, they're going to get 40% of their pensions, while the brass at the very top got millions of dollars. And they knew what was coming when many of the people down below, especially the drivers, had no idea, had no way to prepare for what was coming, got completely wiped out. They may get zero on these pensions. Maybe they get 40%, but they got a major haircut while the brass ride off into the sunset, and they're going to be okay. But, you know, it's another reminder that you've got to be looking out for you. The people at the very top, the CEOs, the COOs, the presidents, they're not going to be looking out for you. They're looking out for themselves. And you don't know if your pension is going to be around 5 years from now, 10 years from now, or 5 weeks from now. You don't know. So you've got to be looking out for yourself. More bad news. Blue Harvest, a major food company, files for bankruptcy, closes down all operations, laying off everybody. This 3 days ago. 425 employees now unemployed. The company has between 1,000 and 5,000 creditors. They don't have the assets to pay off this debt. So investors, employees, completely wiped out here, jobless. The investors are going to get absolutely nothing, it looks like. Absolutely incredible. And I believe this was a ground fish company, a seafood company, a ground fish company on the East Coast, now files Chapter 7, Blue Harvest. So 425 employees are now unemployed. Do they have mortgages? How do they pay those mortgages? How do they pay their own debt? Blue Harvest looks like they're going to just pretty much default, screw the investors. They've screwed the employees. They're done. So people are in big trouble here. I hope they had a cash reserve. I hope that maybe their homes were paid off. I hope that they had some other options. More than likely, not. TheEconomicCollapse.com. The U.S. is setting all sorts of crazy new all-time records this year. Unfortunately, these are not the records you want to be setting. And here's just a few. Auto insurance, as I said earlier, up 19% compared to a year ago. Credit card debt now has surpassed $1 trillion. It's another record. Household debt, $17.06 trillion. National debt, $32.9 trillion. The homeless population has increased in the last year, up 11%, another record. And then, of course, violent crime is at a record high. Again, these are not the records you want to be proud of. These are not the records we should be setting, but these are new records, and we're going to continue to break these records. And you look at global debt, all-time record. This is bad news, ladies and gentlemen. Bad news, and it is really getting concerning. And again, all this taking place while 23 million people watch football games, while 23 million people know the names of all the quarterbacks and all the stars, but they have no idea what the national debt is. They have no idea what a barrel of oil costs today, what an ounce of gold costs today, an ounce of silver. They have no idea. They have no idea the threat that their pensions are under. They have no idea that their jobs are under threat right now too. They just believe they have a job today and it's going to be there tomorrow. And they've made no plan, no emergency plan in case they lose that job. People still believe everything's going to be okay. Take a look around and smell the coffee, ladies and gentlemen. Pardon me if you hear any snoring. Nugget is comatose right now. And I'm going to finish with this last article. Sunday night, a fan at a Commanders game was charged with assault after a vicious beating and brawl. Now, I was watching some of the videos of this game last Sunday night, and I'm absolutely appalled. But it's nothing new. We see this all the time. But one of these fans, very belligerent, looked drunk. He starts a fight with somebody. Somebody jumps in, punches him in the face like 20 times. He's literally like walking around in La La Land. They escort him out. He's still being belligerent. Then these two women, as he's leaving, get in a fight. One woman gets knocked down by a man, and then another woman kicks her while she's on the ground. And I mean, it's unbelievable. These are adults, number one. These are adult women and adult men acting like really out of control people. I'll put it that way. It's a family channel, so I'm not going to use certain words. But to watch adult men punching another person in the face 10, 20 times at a football game, and then watching two women fight over what? I mean, is it really worth going to jail? Is it worth taking the life of somebody? Remember, you hit somebody, they fall down, hit the concrete, and they're dead. Now, you know, you're up on a murder charge. All for what? A football game. And watching these women who really had no part of this, but then they're involved in this. It's just shocking to see society today. I mean, these are probably somebody's mothers acting like complete lunatics, losers at a football game. This again just reiterates and reinforces what I say on a daily basis. Imagine when the lights go out. Imagine when the water treatment plants don't work. Imagine when the power doesn't work. Imagine when you can't get food, what you're going to be dealing with. The type of people you're going to be dealing with. If they're willing to do this at a football game, imagine what these people are capable of doing when they're hungry. I'm going to leave it there today. God bless every one of you. Thanks for tuning in. Please make sure to like this video, subscribe, share all my videos. And as always, I look forward to speaking with each and every one of you. God bless. Please pray for this country. We need a miracle. I just cannot believe how bad it is getting. And more than likely, you know as well as I do, it's going to get much, much worse. Be careful out there.